When was the last time you checked your credit score? How did you do? Were your nerves on edge when you saw your score? In this video, I'm going to dispel some of the most common myths about credit scores. Millions of people do not know how their credit score works and what goes into it. This ignorance can lead to a lot of problems down the road, such as bad credit and being denied for a loan. In this video, I'm going to dispel some of the most common myths about credit scores so that you can understand how they work and start taking steps to improve your score. Before we move on, please like and share this video, subscribe to our channel, and don't forget to click that notification bell icon for more videos like this. Feel free to dive into the comment section and tell us more about your ideas. There are a lot of credit score myths out there, and it's hard to know what is true and what is false. That's why we're here to debunk the 7 most common credit card myths. By understanding what credit scores really are and how they work, you can take steps to improve your credit rating and get on the path to home ownership or car ownership. So let's get started. Myth number 1. Each person has only one credit score. In the USA, there are 3 credit reporting agencies: Experian, Equifax, and TransUnion. These agencies create credit reports and credit scores for U.S. consumers based on the information that creditors supply to them. Unfortunately, not every creditor reports their information to each of these agencies. A creditor may report to one agency and not the other. Creditors may also only update the credit agencies with your current information once a month or less often sometimes. Experian, Equifax, and TransUnion may not have exactly the same credit information about you, nor do they use the same software and calculate credit scores. This will mean that each of these agencies will generate a different credit score for you based on the information that they have on record for you and how their software evaluates the information they have for you. Myth number 2. You can get your credit score for free once each year. You can get a free credit report each year from Experian, Equifax, and TransUnion, but you usually have to pay to find out your credit score. If you don't want to pay but you would like a rough idea of what your credit score is, several companies and organizations are now also offering credit scores for free as well. These include Credit Karma. In exchange for your score, they share your financial information with advertisers, and RBC, the Royal Bank, who is providing their customers with free credit scores. Whenever you apply for credit or open a new bank account, the banker will ask for permission to check your credit. You can ask them what your credit score is. You can also ask them to tell you the strengths and weaknesses they see on your credit report if you want to improve your credit score. Myth number 3. Having a good job or earning good money will strengthen your credit score. Your occupation and your income are not part of the credit scoring formula. Even if you are rich and famous, it doesn't matter. Your occupation may or may not be reported to the credit reporting agencies when a creditor or lender requests a copy of your credit report, and your income is never reported. There isn't even a place to put it on your credit report. Having a stable job and a good income is very important to lenders, but it has nothing to do with your credit report or your credit score. Your credit report only shows your payment history and credit behavior, not your payment potential. Myth number 4. Spouses have the same credit score. The credit reporting system is like the driver's licensing system in that everyone has their own record. No one shares a record. If a police officer pulls you over for speeding, you can't get the police officer to put the ticket on your spouse's driving record. It goes on yours if you are at fault. The same is true with your credit report. If the debt is only in your name and you are late with your payments, the late payments are only reflected on your credit report. However, if a debt is joint, then the late payment notation goes onto both credit reports. If you and your spouse are joint on all your debts, then it is possible that you will have similar credit scores, but it is still unlikely that your scores will be the same for several reasons. The time each of you has had credit is probably different. You may have had a debt in only your name within the last 7 years, and not all joint debts always report on each person's credit report. Yes, this is weird. It's one shortcoming of the system. Myth number 5. Your credit score is not affected by your ex-spouse when you get divorced. When a lender grants you and your spouse credit based on a joint application, they are approving the loan credit application because 2 people have promised to repay the debt. Just because you no longer live with your spouse or are divorced from your spouse changes nothing from a lender's point of view. If you want to change who handles a debt, You or your ex-spouse must either pay out the debt with a new loan or re-qualify for it in only one person's name. If you don't do this and leave the debt as it was, you remain fully liable for the repayment of that debt. If you thought that your ex-spouse was making payments on that debt, but your creditor informs you they have stopped making payments, then it is your responsibility to continue those payments. If it took the creditor a while to track you down, your credit could be damaged by the missed payments you didn't know about. So your credit score can be affected by your ex-spouse if you still have any joint debts with them, because a divorce only dissolves a marriage agreement, not a joint borrowing agreement. Number 6. Bankruptcy permanently ruins your credit. If you go bankrupt, a record of the bankruptcy will remain on your credit report for 6 to 7 years, depending on which province or state you live in. During that time, the bankruptcy notation will negatively affect your credit score and make it difficult to get credit. However, after the 6 or 7 years, the bankruptcy record and all records of bad debts that are the same age will usually be removed from your credit report, and this will allow you to get a fresh start. If you are struggling with your debts and are considering filing for bankruptcy, there are many good bankruptcy alternatives that can work out much better for many people. Myth number 7. Becoming debt-free will give you a perfect credit score. While becoming debt-free and staying debt-free is a fantastic way to live, it's not a silver bullet for your credit score. Your credit score is based on your credit behavior and payment history, not just the amount of debt that you have. Not having any debt will help your credit score as long as you maintain at least one active credit account, like a credit card or a line of credit. If you don't have any active credit, the credit scoring system doesn't know how you are currently handling your obligations. If you use one credit card occasionally and pay it off completely every time you get the bill, then the credit scoring system can see that you are using your credit responsibly. So the key takeaways here are: the late payment notation goes onto both credit reports if you're joint on all of your debts. Your credit score can be affected by your ex-spouse if you still have any joint debts with them, because a divorce only dissolves a marriage agreement, not a joint borrowing agreement. A record of the bankruptcy will remain on your credit report for 6 to 7 years depending on which province or state you live in. If you don't have any active credit, the credit scoring system doesn't know how you are currently handling your obligations, and becoming debt-free and staying debt-free is a fantastic way to live, but it's not a silver bullet for your credit score. Thanks for watching. If you have any questions, feel free to form a discussion in the comment section. Also, please like and share this video. Remember to subscribe, and see you next time.